Today was a good day for volatility traders. The S&P 500, along with some major stocks and ETFs, gave us some nice volatility setups that you could take advantage of. These are setups that don't typically appear or give you volatility edges, but today you had both of them happening at the same time. Now I'll start the conversation with the S&P 500 futures, and then we'll take a look at 4 stocks. The first stock we'll take a look at is Coca-Cola. After Coca-Cola, we'll look at MasterCard. After MasterCard, we'll take a look at 2 ETFs, XLV along with XLF. We have a full plate of symbols, both futures and stocks, to give you an idea of what a good volatility day looks like. Now let's start first with the ES futures. And if you don't trade the full-size futures, our futures volatility box models will also plot on a chart of the MES, the micro ES futures, along with SPX for those of you that prefer using that as your asset class. Now I'll use the ES futures here to help share the setup that triggered today. Now originally in the morning we had our rally, but after that rally we started to have this sell-off. Now instead of guessing where the sell-off was going to end, we had the volatility box models to help give us an idea. Today we had ES futures breach its aggressive volatility box models. We had broken outside of the scalper, which gave us clues that, hey, we should now be looking for volatility to start to pick up. Now, in that 8 to 9 a.m. Pacific hour, we had price action breach our sign entry lines. That happened with this green wick right here of the candle. Once we had price action breach our sign entry lines, we're now looking for signs that, hey, price is starting to hit oversold territory. We get that via the edge signals indicator, and that tells us that, hey, we're now looking for this selling to subside and for buyers to step in. Our entry is at the sign entry line. Our stop is outside of the volatility box clouds, which in today's case was 11 points worth of risk. And we hit those 11 points when we made the move in this green wick of the candle right around 9:42 a.m. Pacific. Now our second target was a little bit further away at the gray target line, nearly 20 points away in the S&P, which would have been a nice winner. But the stop at break even got taken out in this retest right here, right after the lunchtime hour ended. So in the S&P 500, we had just that first T1 getting hit, and after the T1, that was pretty much it in terms of the S&P 500 setup. Now we move our attention to the 4 stocks that we talked about. Let's start first with Coca-Cola. If we load in a chart of Coca-Cola with our stock volatility box models, I think Coca-Cola's chart is one which is important to study. It's why I think it's important to take some off at our target line instead of trying to just hold out the entire position for a home run trade. Now, Coca-Cola today had a sell-off just like the S&P 500, and that sell-off took Coke straight into its aggressive volatility box models. Just like we looked at in the S&P 500, you had the edge signal confirmation, you had momentum crossing. The 1-minute chart on stocks I think is a little bit too messy, but a simple way to mitigate that I think is the 2-minute chart. In the 2-minute chart here, you get to see the edge signal confirmation, you get to see momentum reversing, and you even get to see that 1-2 punch setup in fruition. Really nice setup inside of Coca-Cola for the morning. However, as soon as that afternoon hour ends and we had the sell-off into the close, unlike the S&P which bounced a little bit, Coca-Cola straight into its conservative volatility box models. Now you see the buyer stepping in directly into the close at the conservative volatility box models right near that 71 price. And if I come into the daily time frame chart, the 71 price is fairly close to that gap fill, looking for a short-term bounce even into tomorrow's activity. So that's where I thought Coca-Cola was a nice setup to call out. You hit the T1, but not to reverse all the way into the conservative models, which I think is still setting up a nice entry for tomorrow. Now the next stock we could take a look at is MasterCard. MasterCard's something similar here. Price action selling off, except unlike Coke, which bounced from the aggressive models, MasterCard continued to keep going all the way down to the conservative models before we started to see signs of momentum reversing, along with sellers starting to exhaust and buyers stepping in. Unlike Coca-Cola though, MasterCard held its own even into the close, so a nice setup here inside of MasterCard, and for those of you that are still holding on, so far the setup is still looking good even on longer time frame charts. Now we move our attention to the 2 ETFs. We had XLF and XLV. I'll start with XLF first. Now XLF, the part that made me sit this setup out The entire setup essentially took place in that lunchtime hour. That was a little bit frustrating. I'm not willing to take an entry during the lunchtime hour, but it seemed like that was where the base was building inside of the ETF here. And even that 1-2 punch setup wasn't all that appealing, with the entry never giving us an opportunity back inside of the clouds. You switch your gears to XLV and you get to see this happen even more. So the two ETFs bounced right off of our clouds. However, the two individual stocks that we looked at in today's video, and there were of course many others, gave you opportunities that I think you could actually take advantage of. The two ETFs I wanted to call out just to show you how when these ETFs hit, how quickly those bounces can happen. But these individual stocks give you an opportunity to really build your entry. Both MasterCard and Coca-Cola allowed you to do that and get entries at better prices inside of our clouds where you can take advantage of the volatility that's setting up. I hope you found today's video useful. For those of you that are both futures along with stock traders, we looked at a few different examples, one inside of the ES futures, another inside of a set of stocks and ETFs, both with the idea to demonstrate how today's volatility, especially in this 8 to 9 a.m. Pacific hour, really gave you some nice long side entries. Take care, everyone. Good luck trading, and I'll see you in our next update.